Okay, it's Sunday night. Pats had a good win against Carolina. I play golf today. Not so good. I didn't play too good. Didn't play too well. And I wanted to do is because some people still some portion of the class still struggling a little bit with LIFO, FIFO. I wanted to do an example. I've got that prepared. I'll put that up in a second. But before the second thing I want to do is just talk about learning like what accounts go on what statements. So like they go on balance sheet, income statement, like where's current asset, where's an accounts receivable, accumulated depreciation is different than depreciation. And so my advice for you, like that's sort of more memorization. So if what you can do is go to some of the financial statements in the book, and look at that multi-step income statement, the components on there. They'll start with gross sales minus sales returns, and sales discounts get you net sales minus cost of goods sold. It's gross profit, right? Gross profit divided by net sales is the gross profit rate. And you have your operating expenses, your non-operating expenses. It gets you to pre-tax income. Then you have income tax expense and net income. Okay, so I know that's. So I think you can look at that and you can memorize that just by looking at some statements and then looking at the balance sheets and the statement of retained earnings and seeing what's on what account. And earlier, I have that account classification handout that I put up early in the semester. It's on Sakai under resources. So take a look at that. It's definitely going to be on this exam coming up. And you're going to have more of that as the final approaches. One of the things I have to teach you is what accounts go on what statements, journal entries, which I think most are doing pretty good at. But now, so that's what, if I were, if you're struggling with multi-step income statement, what accounts goes on what financial statement, that's what I would recommend. That's what I would do. And again, it's not if you struggle with LIFO, FIFO a little bit, maybe because that's more math oriented. I understand that. But the accounts, that's memorization. So you should be able to, if you put the time and effort in, I think you'll improve if you feel you need improvement. All right, here we go. I'm going to put up a whiteboard, which I've already done, and we'll go over LIFO and FIFO. Okay. So first, the spotlight. So you see it over here, right? These are the facts that I'll give you, like right to here. Okay. And maybe I will just box those in. So this would be some facts that you would get. And when I give you this on the exam, I'll give you these facts. We have beginning inventory, the purchases at different prices. Okay. And I probably would extend them out for you, but if I didn't, if I just gave you the units and the price, you'd have to extend it out like 1,000 times 450 is 4,500 and so on. So the beginning inventory plus the purchases, in this case, 500 units, the 250 plus 150 plus 100, that's 500. And I added the values of 1,250, the 900, the 625, that's 2,775. So that's beginning plus purchases. That gives us total units available for sale, 1,500. Which is the 1,000 plus the 500 of purchases, and it gives me the value here. And what I would do, and it wasn't always done on the test, is, and there's more than one way to do, to figure this stuff out. But I think the simplest way, and the way I'm teaching it, is to put cost of goods sold, put the cost of goods sold formula. I would write that right down: beginning inventory plus purchases, the sum of that's cost of goods available for sale. Then we have to minus ending inventory, and it depends if it's LIFO or FIFO ending inventory. We'll get into that in a second. And that equals cost of goods sold. Okay, so we get the beginning inventory of 4,500. We put that over here. We have the purchases of 2,775. Again, this is dollars. There, that's cost of goods available for sale. Now to find cost of goods sold, well, now we have to find ending inventory under FIFO and LIFO. Okay, so that's what we're going to do. That's what I've done. So FIFO means first in, first out. We know that. So that means you assume that the earliest purchases are going out the door, and the most recent purchases are still on hand and are in inventory. So first in for if, oh, and I gave you one more piece of information. I said 1,100 units were sold during the month. So if you had 1,500 available for sale, you sold 1,100, then you know 400 units remain in inventory, okay? And those 400 would be the most recent 400, okay? Which is the this $100 purchase on January 20th at 625. The 150 purchase, we have to get up to 400. We have to build up to 400. There's so 150 at 600. And then we need another 150 of this 250 unit purchase to get to 400 units that are still in hand. So we do that at $5. And we add that up, and that would be $22.75. So maybe I'll do this. Well, I'll make this FIFO. We're gonna run out of room, but so I'm going to put this ending inventory. So now I could say what's ending inventory under FIFO. You've got the 22.75, and I could, but then that also gives you the cost of goods under FIFO. So that adds up to 5,000. Let's see. I'm just sanity checking that. So that's 5,000 because we sold 4,500. Yeah, so that's right. So that's the cost of goods sold. Excuse me. Pardon me. And ending inventory into FIFO. Now in the LIFO, the beginning, we assume that the beginning was calculated properly, so that you already, whether it's under FIFO or LIFO, the 4,500 would have been the right amount. So you don't have to worry about that. So we'll just put that back in. And then the purchases are the same, 27.75. Cost of goods sold available for sale, 72.75. Now less ending inventory, that's different, okay? Now, again, we have 400 units left, but under LIFO, we assume the most recent purchases are the ones that were sold. And so that the oldest purchases, in this case, the beginning inventory is what's on hand. So we had 1,000 at the beginning. So we assume that it comes out of that pool of purchases. And we had 400. We only need 400 because there's 400 units on hand at 450. So that's $1,800, okay? So that's what the LIFO ending inventory is. So that gives you LIFO ending inventory, and then you subtract this, and what's that give you? 54.75. Pretty sure. Let us double check. $54.75. Right. That's how I would do it. That's how you do LIFO, FIFO. And some of you had no, you didn't even put down the basics on the quiz, and that's okay. It's just a quiz, but the exam's coming up in about a week. So I would automatically do it this way: beginning inventory, purchase, cost of goods available for sale, less ending inventory is COGS. Have two columns for FIFO and LIFO because I've asked you two questions. And then the only thing that changes is the ending inventory. And FIFO means that the most recent units are on hand, and you got to build up to what's on hand. In this case, you had 15, you sold 1,100. That means you get 400 on hand, and you build up the most recent purchases, okay? Which we did: 100 from January 20th, 150 from January 10th, and 150 a portion of the January 5th purchases because we only needed 400 units. And we plug that in for FIFO ending inventory, subtract it out, we got FIFO cost of goods sold. On LIFO, it's this opposite concept. If they're last in, first out, that means it's the oldest purchases that are still on hand. We need 400 units. We have 1,000 to choose from here to pull from. So we take 400, even though there's a whole pool of 1,000, we only need 400 of that because that's what's on our hand. So 400 times $4.50 is 1,800. We plug that into the LIFO ending inventory. That's our LIFO ending inventory. Subtract that from the in this column, it gives you LIFO cost of goods sold. So there you have it. I will. This should be posted before the morning. And I will see you bright and early in class Monday morning. Well, maybe not bright, but early. But well, hopefully you're bright. All right. Take care.